Hello and welcome to ET Now Startup Central, India's first and only daily show dedicated to startups and entrepreneurship. I'm Chandra Srikanth, joining you live from India's startup capital, Bengaluru.
I'm Krishna Kumar, coming to you live from ET Now's Mumbai studios. And Chandra, clearly the focus of the show today is the big deal that got announced post our show yesterday evening, and that is that of MakeMyTrip and Ibibo. And our good friend Vijay Shekhar Sharma called it the BAP of all deals, and you yourself called it the mother of all deals. Chandra, and we have a very special person joining us here on the show today, isn't he?
That's right, Krishna. You can call it mother, father of all deals. But you know, the truth of the matter is, it clearly shows the increasing signs of consolidation that we are seeing as far as the internet space is concerned. You know, last week we saw the first Cry deal. We had its founder here earlier this week, and now you see the same happening to the online travel space as well. We really have to wait and see what verticals are up next, and you know, if this also signals investor fatigue at some level. But you're right, we have a special guest on the show, none other than Kalra, the founder and CEO of MakeMyTrip, who will continue to be the founder and CEO there after that mega deal yesterday, which will value both companies, the combined entity, at $1.8 billion. Deep, thank you so much for joining us here on ET Now Startup Central. You know, when we spoke to Ibibo CEO Ashish Kashyap yesterday, he spoke about how this was a meeting of the minds and amazing chemistry between you and him. But just a few months back, I remember how both of you refuted each other's numbers when it came to hotel bookings. So tell me how this animosity turned to bonhomie barely in a few months' time. What was the trigger for this deal?
My God, you guys really want a scoop where there's none. But the reality is, I think animosity is really exaggerating it. I think the reality is that there was I think difference of opinion on fact. You can cut the hotel market in many ways. You can look at it in terms of how many properties you have online. You can look at it in terms of transactions. While you can have 30,000-40,000 properties online, some need not be active all the time. So there are many dimensions to it, right? So I think that was the point of view. I don't think anyone took it to heart. So frankly, there was no disagreement. In fact, if anything, we had been meeting on the unfortunate service tax case. So we were actually completely aligned, and their case was joint with ours. Even when we got that great verdict from the High Court, it was a joint verdict for both companies. So I don't think there was any animosity, frankly, ever. I've known Ashish for a long time now. In fact, when he was at Google, he would be actually on the sales side of Google. And when he was at India Times is when I first met him. So there's a long history out there. And obviously we were competitors, and we were tough competitors. But I don't think we ever at least I never let, I think, emotions come in the way. If you have a decent person on the other side who's doing his job or her job and doing a good time and being a tough competitor, you actually respect them inwardly. So I think that was the genesis of this. And then, yeah, this has been going on for a while. This has actually taken more than 2 quarters.
All right, Deep, this is Krishna coming to you from ET Now's Mumbai studios. That's a very good answer. I appreciate the healthy relationship that you have with Kashyap. But the question was, what exactly was the trigger for this particular deal to take place? Talk to us about that.
I think the trigger, very frankly, Chandra, was about wearing a lens which is far more long-term in nature and not really looking quarter to quarter. Like I said earlier on, we were well-funded, they're well-funded, they had a good backer, they were private, we were public, we had access to funds. We had C-Trip earlier this year had put in 180 million. We were doing quite well on our strategy. But every time, we wore the 1 year, 2 year and 3 year lens, we said, okay, is this the way we want the market to develop? Do we want to keep burning money in discounting and getting more market share? Or do we want to win in the right dimensions and the right aspects? And for me, the right dimensions and the right aspects are about a great brand experience, which comes out of trust, reliability. And each time you do it, you just have a very peaceful transaction and your mind is at rest because it's going to work. And this is not only about online travel. Travel, in fact, people's anxiety levels are higher. It's more than ordering a book and wondering will it reach 3 days or 4 days later. This is even more anxious because you want to make sure that booking is confirmed, because every trip is important.
Deep, well said, but the question, I've been grappling with is why now, the timing of it all? Because keep in mind, both of you raised funds a few months back, so there's no desperation on that front exactly. So why the deal now?
Yeah, exactly. And the short answer to that is why not now? But I'll tell you why now. And exactly, you're right. This is not about desperation of funds on either side. Both sides have ample funds. This is about taking a long-term and taking a long-term decision, keeping in mind how do you want to lead this industry going forward. And therefore, I think it's been done at the right point of time without any desperation. Whenever you do deals out of desperation, whoever is more desperate ends up getting shafted in the deal. This is not about that. This is actually a meeting of two very strong companies saying, listen, let's chart out the future for the travel industry and try to say how can we really deliver a very good value proposition in which customer obviously gets a great experience, gets a great deal, but even the OTAs and the suppliers, the entire ecosystem can develop, do well and make money. So I think that's very important. I don't think any company is sustainable in the long run if they keep losing money. And so this deal is actually very well founded on very strong fundamentals and principles.
Deep, you said no desperation. So how difficult was it then to really get Ashish Kashyap on board? Because I'm sure it's not easy for an entrepreneur to let go of a CEO and founder title to become a president in a company that's acquiring his company. So I mean, a very emotional decision, an ego battle. How easy was it really to get Ashish on board for this?
So I think this question is really for Ashish then. You should ask him. But what I can say is that I think Ashish sees the big picture. I think please look at it from the other point of view, from being a company which was fast growing but a number two, privately held. You're now at the helm of affairs of a company which is a much larger company. It's public. It's got the brands together. And by the way, he comes in at a very senior title, at a very senior place. So I think anyone who's mature will look at this actually as a leg up and not a step down. I mean, you can be a big fish in a small pond, but do you want to really keep playing that game, or do you want to really enter the ocean and be an important player there?
Okay. But Deep, talking about the broad market as such, clearly the battle has shifted from online air tickets to hotels. That seems to be the big battlefield, at least in the last year. So, what was that the driving factor behind this deal? And going forward, will a majority of your revenues as well come from the hotel space and not so much the air ticket space, which has largely become a commoditized segment?
Yeah, absolutely right. I think the accommodation space, and I'd like to call accommodation slightly different from hotels. This includes alternate stays. So we've got right stay. This also includes the holiday package product, which has hotel and more. So that's where the margins lie. It's a fragmented market with hundreds of thousands of suppliers, unlike airlines where you have concentrated suppliers and therefore you have very little bargaining power as an OTA. So clearly both sides have been moving towards hotel in a fast manner. Last quarter that we reported, you saw over 50% of our revenues come from hotel and packages, and that will continue. Even I can tell you from Goa Ibibo side, a large chunk of their revenues actually come from the hotel side of the business.
All right, Deep, let's talk about the way forward. Then post this deal, there are two scenarios you could pursue. One is aggressive market share gain with high cash burn to edge out competition, or improvement in profitability because the undercutting will definitely come down. Tell us, which one will you choose?
Yeah, no, it's a great question, Chandra, and I don't think the answer is actually black and white. It's not a binary answer. I think there is a possibility, a distinct possibility of doing both. Of course, it comes down to what do you want to determine in your joint business plan, when do you want to look at break-even and profitability, and do you want to sacrifice penetration of the market? So I don't think we want to sacrifice that to a great degree. We want to keep penetrating the market. We want to get into tier 2 and tier 3 where millions of Indians are coming online for the first time through their mobile phones. They want the opportunity to book online. They might be more comfortable in their own languages. They have other nuances that you have to cater to. And we don't want to, take our foot off the accelerator in that penetration. At the same point of time, we want to be very mindful that eventually all corporations are in the business of making money. We've been in that position before. Post IPO, we had a great run with very profitable years, and we know that that's eventually what we want to do and the market wants. So it's a question of what lens you take, and do you want to look at a 1-year horizon, 2-year horizon, or more. And that's something we'll be sharing once we consolidate the companies post the CCI approval, and we'll be able to share that with you by the end of the year, early next year.
All right, Deep, analysts estimate a 65 to 75% market share across online air booking, hotel and bus booking for you as a combined entity after this deal. Can you confirm that number for us? And are you still confident of a CCI nod, considering you will be a virtual monopoly post this deal?
Yeah, so I can strongly confirm that those numbers are complete bunkum. I don't think they know what they're talking about because they have to recheck their facts. The reality is that the total travel industry is worth $30 billion, and the two companies put together will be about $3 billion. So no way you cut it will you be more than 10% of the market. Even if you go segment-wise, it's much smaller. If you look at the hotel segment, both companies probably have about 2, 3, 4% market share at max. Combine them together, you have a single-digit market share. Even if you look at the air segment, we have 16% market share. I believe on the other side, we are looking at about a mid-single digit. You'll end up with low 20-odd%. But very importantly, no pricing power. Pricing power in airline ticketing lies with the airlines, as we all know. They have the best rates, they determine the price. So there is no way that we're going to end up, with more than probably 10-12% market share overall. And so therefore, we don't think.
But Deep, 10 to 12% sounds like a really small number because, whichever way you look at it, MakeMyTrip and Ibibo pretty much dominate the market, when it comes to online travel, hotel, or even bus. So, that's a really small number. Are you telling me the market is that fragmented?
No, Chandra, let me explain it. The way it's looked at is the overall industry. Firstly, you have to realize only 15% of the industry has moved online. 85% of the industry for hotels is still booked offline. So that's the overall industry. Of the industry which has moved online, we are the number 1 and number 2 players, and there are many others. There's Yatra and ClearTrip and Expedia and Booking.com, etc., etc. A lot of other players. So you have to look at the whole market, and I believe that's the way the Commission looks at it. And anyway, we're going to file our papers, and they are going to talk, but there is no question of having any kind of pricing power or any kind of market share dominance. I wish if there were those kind of numbers, if those existed, we probably didn't need to do the deal.
Finally, before we let you go, this deal in an essence captures your journey in the last 2 decades. It's being hailed as a mega coup for you, and it also shows how you've sort of managed to come up trumps and survive every single cycle when it comes to, .com boom or bust. So tell us the larger lessons that this whole deal and your journey has for other startups.
Yeah, thank you for that, Chandra. I'll take it as a big compliment. Yeah, I think we've pulled off something very interesting, and I think it's the right thing. I think this does herald in some sort of way, probably maybe a wave of consolidation, and that's what I'm hearing from a lot of the comments I got from industry colleagues, from even beyond travel. And I think the reality is the value creation is there for everyone to see. I mean, the market has spoken. Obviously, you guys know this, but we got a huge thumbs up from the market. Our stock went up 45% last night, and I think that says it all. So obviously, this is something which investors and analysts alike have welcomed, and for the right reasons. So I think overall, this is good for the ecosystem, and I think this will get a lot of other people also to look at consolidation in a very serious manner. And I think that's good for the industry because people want to see, how eventually companies can also make money while customers enjoy good discounts.
Thanks so much, Deep Kalra, for joining us on the show today on that deal that, really heralds a new wave of consolidation as far as the internet space is concerned.
Thanks, Chandra. Pleasure. Bye.
All right, Chandra, before we wrap things up on this particular edition of Startup Central, let's quickly do a number crunch as well. And the number we're crunching today is 3.38 million. That's because that's the total number of paid subscribers that Netflix has added for the 3rd quarter. And it represents a growth of more than 50%. Netflix Inc. has witnessed as original shows such as Stranger Things drew new international viewers. And Chandra, I'm currently, very curious and very interested after watching Amanda Knox's documentary on Netflix, something very similar to the Making a Murderer series that went absolutely viral thanks to Netflix. And these numbers are just indicative of the kind of audience and the kind of audience retention that they're able to put up. But with that, Chandra, we do need to wrap things up here on this particular edition of 18 Hours South Central. Many thanks for watching. Don't go anywhere. Keep it with ET Now.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.